Nvidia stock closed at $215.22 on Friday, May 8, 2026 at 4 p.m. Eastern Time. Since today is Sunday, May 10, the market is currently closed, but the energy surrounding this specific price point is anything but quiet. While the surface-level story is a steady 1.76% gain to end the week, the real situation is far more interesting. Most people see a stock that is simply consolidating near its highs, but the heavy volume we saw in the final hour of trading suggests that institutional players are positioning themselves for a massive move. The expectation right now is that we are in a waiting period before the May 20 earnings call, but the reality is that the options market is already pricing in a swing that could catch the average retail investor completely off guard. If you are looking at your individual brokerage account and wondering why the volatility has spiked despite no major news, it is because the big players are front-running the data center numbers. The general belief about Nvidia stock is that it has become too expensive to touch, trading at a premium that some find hard to justify. You hear it at work, you see it on social media, and you might even feel it when looking at your own portfolio. But here's the deeper take that challenges that narrative. When you look at the upcoming fiscal 2027 first quarter outlook, management is calling for $78 billion in revenue. That is not just a growth number, it is an acceleration. The contrarian view is that Nvidia is actually cheaper today on a forward earnings basis than it was 6 months ago, because their profit growth is outstripping their price appreciation. While the crowd waits for a dip to buy, the smart money is recognizing that the dip might never come if the Vera Rubin platform ships earlier than expected. This is the tension between expectation and reality that defines the current trading range. Recent movement has been dominated by a tug-of-war between macroeconomic pressures and sector momentum. We've seen Nvidia stock bounce off the $210 support level 3 times in the last 10 sessions, showing that buyers are stepped in every time the bears try to take control. Trading volumes have remained consistently above the 30-day average, which tells us this is not just retail speculation. These are significant allocations being made. We're seeing a lot of interest in online investing platforms where younger investors are piling into fractional shares, but the real needle mover is the institutional activity. Large block trades have been hitting the tape at the midpoint of the daily range, suggesting that fund managers are building positions without wanting to spike the price too early. If you are using investing sites to track your performance, you've likely noticed that the entire semiconductor sector is taking its cues from this one company. When Nvidia stock moves, the rest of the market follows. This sector momentum is being fueled by a surge in capital expenditure from the world's largest tech firms. Microsoft and Meta have both signaled that they are not slowing down their spend on AI infrastructure. In fact, they are increasing it. This creates a massive tailwind for Nvidia because they are the only ones capable of delivering the compute power required at scale. This is not just about chips anymore. It's about the entire software stack and the networking hardware that connects these massive data centers. Before we get into the business model, I want to hear from you. Comment below how many shares of Nvidia stock you currently hold, or if you are waiting for a specific price target to enter. It's always great to see where the community stands on these major market leaders. Looking back at the business model, what Nvidia does is actually quite simple, but incredibly difficult to replicate. They provide the fundamental infrastructure for modern computing. While they started in gaming, their transition to the data center has been the defining shift of the last decade. They dominate the market for GPUs, which are far more efficient than traditional CPUs for the complex math required by artificial intelligence. Their past performance shows a consistent ability to beat and raise their own guidance, which has led to the massive valuation we see today. They have built a moat not just through hardware, but through their CUDA software platform, which makes it very difficult for customers to switch to a competitor. The future outlook for Nvidia stock is a mix of high-stakes catalysts and potential risks. The biggest catalyst on the horizon is the official launch of the Vera Rubin platform. If this starts shipping in significant quantities in the second half of the year, the current revenue estimates will likely be far too low. However, the risk remains in the broader economy. If we see a definitive move in the 10-year Treasury yield above 4.5%, it could lead to a broader rotation out of growth stocks. This is where investment help or professional advice becomes important, as the volatility in high-growth names can be stomach-churning for the unprepared. Whether you prefer self-investing or using a robo-advisor like Schwab Intelligent Portfolios, staying informed on these macroeconomic shifts is vital. Many people are turning to platforms like Robinhood or SoFi Invest to manage their trades because they offer easy access to these high-momentum names. Whether it's through active trading or holding long-term in a retirement account like those offered at Fidelity, the strategy remains the same. You have to look past the daily noise and focus on the fundamental shifts in how the world uses technology. Interactive brokers is another popular choice for those who need more advanced tools to manage their risk, especially when dealing with the high-volume trading we see in Nvidia. The central insight here is that the market narrative often lags behind the technical reality.
The crowd is focused on the high price tag, but the reality is that the earning power of this company is growing at a rate that justifies the premium. The expectation is a calm period before earnings, but the reality is an aggressive accumulation phase by large institutions. This contrast is what creates the opportunity for those who are paying attention. As we move closer to the May 20 report, expect the tension to grow. The outcome of that report will likely determine the trend for the remainder of the year. As we look at the closing figures one more time, remember that the $215.22 mark is more than just a number. It represents a psychological battlefield where the bulls and bears are fighting for the next 20% move. If you are looking for investment or wanting to invest online, make sure you are doing so with a clear understanding of your own risk tolerance. The depth of this analysis suggests that while the risks are real, the catalysts for further growth are equally significant. Staying authoritative in your approach means not getting swayed by the headlines of the day, and instead focusing on the underlying data that drives market movement. In summary, the contrast between what the market expects and what the data is telling us has never been sharper. Nvidia continues to defy gravity, not by luck, but by being at the center of the most important technological shift of our time. While other companies are trying to catch up, Nvidia is already moving on to the next generation of hardware and software. This forward-looking approach is what keeps them ahead and what keeps the stock as a central focus for every major investment platform, from Fidelity Investments to Interactive Brokers. The authority of the company and its sector is matched only by the intensity of the interest from the global investing community. Keep an eye on those support levels and stay ready for the volatility that is sure to come as we head into the next earnings cycle. Authority in this market comes from knowledge, and the depth of the current move in Nvidia stock is a testament to the power of staying informed. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.